Hey everyone, welcome back to Voice of Crypto's podcast series. We have with us again Neeraj Nagarkatti, who is a global crypto tax accountant based in the UK. He's also an international tax consultant. We had Neeraj in our last two podcast episodes, and he's back with us to give you some quick tips and tricks around crypto taxation. Hi Neeraj, how are you doing?
Yes, I'm doing well, thanks. Very well.
Great. So I guess we should dive straight into it.
Yeah, absolutely.
I think the first question that I have from you is one question that our audience has been awaiting very eagerly, and that is, what are some tips that you have, some tax tips that you have for crypto investors or traders by which they can lower their crypto tax?
Oh, right. Yeah, there's quite a number of strategies that you can use. And I'll just say from the very start that I'm looking at it mainly from a UK and USA perspective. So a lot of these won't apply for like an Indian taxpayer. However, it just gives you an idea of what tax strategies other countries are using to lower their taxes. And these are, I call them tax tips which are already there as part of the natural tax system. They weren't put in place by anyone else because crypto gains, in, let's pick the simplest example where you buy one Bitcoin and it goes up to 2 Bitcoins in a period of time of appreciation, that will be subject to what you call a capital gains tax. And that happens when you sell the Bitcoin rather than just holding it. So a tax tip, if you see that, or there's no reason to sell, is actually just holding on to your crypto long term. And that means that you won't be taxed on what I call the locked in gains or unrealized gains, as it were, because you've got like almost a stored value of that one Bitcoin. So if you bought it for 1, it's worth 2, and you're just holding on to it, you haven't sold it or you haven't disposed of it, then you wouldn't ordinarily be taxed on those gains. And this could be a tax tip which is common in India, and especially with the higher rates of taxation coming in or already in place. So that is one example of a good tax tip. Or from the other side, you can also say that if you just if you just bought some crypto, that wouldn't with cash, of course, that wouldn't necessarily trigger any taxable event. And by that I mean any tax consequence, whether it's a payment or sometimes if it's a loss, a refund. And a few other strategies could involve gifting. And for example, in the US, you can give up to $16,000 US to family or friends, and you wouldn't pay that capital gains when you dispose of it. But what happens is that the person who receives the gift of crypto, they take on the cost on which you bought it. So it's a way so that so as to not have because they didn't pay anything for it, they naturally would have they inherit your cost, the amount that you paid for it, so that when they sell it on, they are taking, they'll use the original cost there. Another way, which is fairly common, and this is typical, could be typical of a lot of countries, is donating crypto to charity.
Right.
And especially if it's like a registered charity, or it could be a tax exempt organization, then this could be beneficial both to you, because you sell it at, well, essentially it's not selling, it's donating it,
Right.
as long as you don't get anything in return for it. So if there's some kind of sponsorship or I think it really has to be a genuine donation with no expectation that the charity will do anything for you other than send you a thank you letter. And actually this has been quite an interesting area, because a lot of charities could pick up crypto as like a new source of revenue. Charities by nature are in the main tax-free institutions, so any income that they receive, as long as it's for like the charitable aims, and it could be for education, helping to reduce poverty, it could be climate change, then this is really new source of income for them. And in the UK, for example, we've seen famous charity like the Royal National Lifeboat Institution, and they've had a trial, and they've come out with, I think, the equivalent of their wallet proceeds show something like $50,000. So this is really a good way for both the giver and the recipient to benefit from it tax-free. But you also have to check whether the charity is registered, and mainly on their website they would say that this is the case, and they'll usually have, like, in their frequently asked questions, yes, you can donate tax-free.
Plus, I think a lot of, while donating crypto for charities, I feel a lot of research needs to go into it, because I have personally come across a lot of websites which ask for charity in crypto, but they turn out to be scams. So would you have any advice for, let's say, newcomers who would want to donate in crypto, or anything on that line?
All right. Yeah. Well, in the UK and USA, you would have like a register of charities, and they would usually have a registered company number, which you could check with an external website. It's like almost like the government register, and it will come up with all the details, the names of the trustees, and if it's something that you saw in a Telegram group and you want, it's worth doing, once again, the research to find out. Of course, you'll want to know where the crypto goes to, and to make sure that it's a dependable and viable charity. And the register of charities in whichever country you're in is usually the a good reliable, that's the word, it's a reliable source before you donate. But of course, if something looks genuine, if it's something that is current, that can touch on hearts, then sometimes the transaction takes place quicker, and it's too late. But register of charities is how I can offer as a tip.
Right. Also,
And
do the tax lowering tips apply to most of the countries, or what countries do these tax lowering tips apply to?
Oh, right, yeah. So they would apply in countries where crypto is seen as a capital asset. And by that, I mean something which is not cash, but you can buy as almost like personal property which you can later sell for a profit, and that you can pay tax on later. So, for example, this is very common in UK, Ireland, USA, and Canada, Australia, and New Zealand, and then they have other tax tips as well, not just giving and donating. Would your listeners like to listen to some more tax tips to reduce the crypto tax bill? Okay, sure. All right, yeah. So some other things that you see as well, like transferring your crypto to either a partner or a spouse.
Yeah.
And a lot of countries would have in the tax system, you either file jointly or you can file individually, but they have each individual has a tax-free allowance which you can use up. And say, for example, in the UK, you've got, say, a spouse who's got $20,000 a tax-free, which has not been used, of an allowance, then it makes sense to transfer the crypto to their wallet. And that is tax-free, and it will be transferred on what you call no gain, no loss. So similar to the gifting, actually, they will take on your cost, but there won't be any tax consequences for selling, or I suppose gifting, you could call it. It's giving your spouse that amount of crypto as well. So that's really powerful thing that you can use in terms of lowering your tax bill. And I picked up on the tax-free allowance as well. Yes. So usually in the US, UK, wherever else, you'll have like an allowance which is separate from ordinary income. So this is purely related to capital gains, and in that you'll have a limit or a slab which is 0% up to a certain limit, which is fantastic, because you won't be taxed on your on the first whatever it is. In the UK, it's £12,300. In the UK, in the USA, it could be different, but yeah, it's these tax-free allowances and transferring to spouse, you can use these as a combination as well.
Sounds good. Are there any other tips and tricks that you would like to add?
Yeah, absolutely. With crypto transactions also comes transaction fees, and these can be, depending on which chain you're on, it can be quite high. I think Ethereum is known to have relatively high gas fees, or trading fees, and as long as the transaction fee is related to the crypto that you bought, you can track it, and there's easily a link between the two, then you can deduct those from your tax bill as well. Yeah, it's quite beneficial as well. And even in some instances, things like crypto tax software, and dare I say, if it's if you can justify that it is, you genuinely needed an accountant to help you, like with an investment strategy or something, then even the professional's fees could be deducted, and I say could with a small c.
Yeah.
But other tips could be, for example, this one is more of a actually, this is something that you might not think of originally, but in India at the moment, you've got the 30% tax, and it's on profits, and you can't deduct losses from that. However, where you have in countries such as, once again, UK, USA, Canada, Australia, New Zealand, then where it's crypto is treated as more of a capital asset or property, really, then you can indeed fine. I usually say that fine, if you've made losses in crypto, they aren't the best. However, you can offset or basically reduce the crypto gains that you made with losses that you had earlier in the year. And if you can lock those in, then that's usually a great tip to reduce your tax bill. And usually it would be for the same crypto. So it's Bitcoin gain versus reduced by Bitcoin loss, Ethereum gain versus Ethereum loss. So it's really in terms of those areas that you can reduce your tax bill. And the other thing about losses as well is that you are able to carry them forward, and sometimes indefinitely, depending on the country that you're in, because it'll only be a matter of time that you will have a gain and some tax to pay, but you'll be able to reduce your tax bill, which is the main thing there. Yeah, as well, you could, if your crypto is held in your personal name, this is more of a long-term planning tool. It's where you transfer your crypto to a company. And the reason for doing that, what will happen first is that when you make, and you do it in the same country, of course, I'd add, because this is global tax, but you do it in the same country where you're a tax resident. By doing that initial transfer, however, that would generate some kind of capital gains tax. However, it's, if you have crypto which is valued fairly low, and this could be where you have, you know, new projects where the valuation is still, you know, fairly close to zero, then transferring those cryptos into a company without paying a lot of tax, like minimal tax, and then realizing the gains, seeing those gains in that company, in general, depending on how you plan it, company taxes are a lot lower than income taxes as well, and or capital gains rates as well. And the other thing is that you can deduct business expenses as well. So you can, I don't know if people, you know, they might have some travel expenses or mileage, what that mileage would be. I don't know, but you can for sure, you know, take out a minimum salary for yourself, as a director, because, you know, as a company director, you're running the show, and you can you can take out dividends instead of crypto. So that's the one thing that you may not be able to do. Fine, you can take out dividends in cash rather than crypto. But as a tax planning tool, moving, especially after a certain limit, then you can have a comparison. Okay, what are my expected gains the next 12 or even 3 to 6 months, really? And then from my personal standpoint, what would be the same within a company, and then you do a comparison. And if it looks like it's worth it, then yeah, for sure, absolutely, you can take out, or not take out, but create a new company, transfer your crypto, and you've still got control of it. Of course, in this instance, the main issue is that you would also have to open a wallet or exchange account for your crypto company. And I mean, in general, this is fine, but sometimes you might have some. It's when it comes to converting back from crypto to fiat, or your Indian rupee or US dollar or UK pound, that you have a crypto friendly bank on the other side as well. So generally a friendly bank with some crypto trading is fairly useful. And I believe Revolut and Kraken are two providers which have that facility. Once again, whether they have that in India, I'm not sure, and there might be alternatives, but these are the ones which I'm seeing, which are fairly common in the UK. And just a couple more, and one will be the nuclear option. and one which is a bit more subtle. So I'll go with the subtle one. So here, if you are on the threshold of what we call a bracket, or a slab, more in Indian terms. So if you're on, it could be 51,000 pounds USD, and 50,000 takes you into the higher slab or bracket. Then if you contribute an extra, say, cash into like either pension, or you make a donation, or you do anything to reduce your ordinary income that's subject to tax, then you go into a lower rate of tax. You become a basic taxpayer, and that can mean the difference between paying 10% capital gains in the UK and even 20%. So that's just by making that one transaction, and there's no crypto involved here. It's purely a cash contribution to a pension to reduce your tax bill. And the last one, which is pretty fun because exciting, and if none of those, or I think it's more, if all of those strategies you've tried and you've still made quite a number of gains, then the nuclear option, well, it's not really nuclear, but it could be the last resort, it could be the first resort for some people, is to go to a tax-free country for crypto.
That does sound.
I certainly built that up, didn't I? Oh, yeah. And these jurisdictions I mentioned earlier, but I can mention them again, like Dubai, which I imagine is a fairly nice destination for Indian citizens, so familiarity and Indian community there in Dubai as well. And Singapore as well, which doesn't have capital gains tax, and Portugal, which could be I suppose like I remember as well, actually, when people from India coming to the UK, as in, like, if only there was a place which was, which had the warmth of India and the European or the values of Britain, and I think Portugal could live up to that reputation. Actually, there's quite a number of it's fairly warm in the summers, and and UK and Portugal have historical ties as well. But
Right.
yeah, those are my crypto tax reduction tips. And of course, you can use these and you'll be absolutely fine, as long as you're playing within the rules. And
Exactly. Yes.
also, of course, crypto tax software, so that you've got a good number of keeping tabs on your transactions, so you know what gain goes against what loss. These are all tools in the armory of like a crypto investor.
Right. I think that this session was an eye-opener for me too, because there were quite a couple of points that I had no clue about. Like we can deduct the transaction fee from the taxes that we give. And I was in fact worried about the crypto tax, the 30% tax on profit. And I'm sure so are a lot of Indians. And there were quite a bit of tips for people residing in the US and UK as well. So I feel like it was indeed an eye-opener for a lot of us. And for any other information that our listeners might need, I'm sure they can get it from your blog, Crypto Tax Geek, where you post such content quite often.
Yes, so they can either log on to cryptotaxgeek.com or send me an email, info@cryptotaxgeek.com, or I'm posted as Crypto Tax Geek across all social media.
Yes. Very enriching episode today, Neeraj. I think we'll be back to our listeners with another fun podcast in a few days. Thank you everyone for joining us today. We'll be back soon. Great. Thank you so much, Neeraj. I think this was, apart from just saying it for the sake of it, it was truly, I think, an educational sort of a lecture for me. I was taking down notes because I recently crossed the tax lab in India, and I was worried about my taxes and how I will get past that, especially the taxes on cryptocurrencies. Now that half of my income is being transferred to me in cryptocurrencies. I'm sure I'll separately connect with you about that too, if you can guide me through that. However, I'm sure I cannot afford your fee as my accountant.
Well, it would be Indian accountant. I know a few number of Indian accountants here.
Great.
And it's always beneficial to get a local to do it. I mean, I've had experience in India in terms of like with Indian companies, and I've given the data to the company data to Indian accountants. They prepare it, I review it, and things like the ITR 6, for example, but income tax for companies, have had to look at that. And even been involved in a project where building not crypto tax, but the tax software for the Indian tax return. So it was looking through, essentially going to Mumbai to a tax advisor and looking at every single page and asking them how it connected, both how the pages connected with each other, and also how each, say for example, you put a number on the first page, or you might put in your name, for example, and then or the bank account number, and you see where else that links to in the tax return.
Something like that. Nice. I think we have we have only 15 minutes left.
All right. Okay.
Should we, can you stick around for 15 more minutes? So we can record 2 15-minute episodes quickly. Or if you want, we can allot
Oh, right. Okay.
whatever you say.
I reckon we can do this another time, actually.
I think that works. I think
Yeah.
around the weekend if you're free, or
Yeah. And I reckon 1:15. I think we've got enough content for
3 episodes.
for 2 more episodes, right?
Yes.
In that case, I reckon what I'll do is I'll put in a couple of more questions in, just so that I'd rather have more and then you can reduce it rather than have too little and then maybe a 15-minute and a 5-minute episode.
Of course. Sounds good.
Is that okay? Cool.
Sounds good.
Yes, I am about at the weekend, actually.
All right, then I think we can take up both the episodes on the weekend rather than
Yeah, that'd be cool, actually.
Perfect.
And I'll have a think of some more questions, and we could do it actually. Sunday is quite a good day for me.
Works for me too. Whatever time you
Okay.
suggest.
Should we just do it at the same time? Because that way
Perfect.
It's quite easy. Sunday at 1 p.m.
Yes. I will send a Zoom meeting link to you.
Okay, sure.
Most probably.
Excellent. All right. And yeah, just throw in a couple. I'll throw it, or if you can think of any questions, then fine. But if there's anything I can think of that would be genuinely beneficial.
I will look for some India-specific questions, and we can probably have a series like those 2 episodes could be for India and Southeast Asian countries.
Okay, yeah. Sure. Of course. Okay, sure.
Okay.
If you could think of those questions sooner, I can do some research on my side and pick out which other Asian countries are seen as interesting for Indian perspective. Is it, say, Singapore? And
then there's
Dubai.
China, there's Dubai,
China.
And I think let's leave China out because we have a lot of that could be a separate episode altogether because of the regulatory concerns in that area. However, we can include next door neighbors to India, like probably Pakistan, and we can have Turkey. Yeah, so I think Dubai, Singapore, Turkey, Pakistan, that should do.
Just those 3, yeah.
Yep.
Pakistan, Turkey, Dubai, and I think that would actually. We don't need any further questions.
Of course.
I believe it looks because if I talk about those countries, then that will make it complete. Yeah.
Yes, I think so too.
Excellent. All right.
All right.
Well, thanks so much, and
thank you for joining in. And as usual, it's great talking to you.
Sure.
All right.
See you then.
Good day. Bye-bye.
Bye-bye.